In this episode, I sit down with two of the best respected and most connected men in the world of economics and investing. We talk gold's explosive rise, the battle between sound money and fiat currency, and what it all means to Main Street investors, and how you can protect yourself come what may. Stay tuned for my candid conversation with Adam Taggart and Brien Lundin. Welcome to the Main Street Capitalist Show. I'm your host, Russell Gray, and we are here live at the New Orleans Investment Conference with two of my very, very good buddies. First, on my right here is Brien Lundin. He is the producer of this conference, the longest running investment conference in the world. It's amazing. You ought to already be making plans to be at the next one. And then my other great buddy, Adam Taggart, who's the host of the Thoughtful Money podcast, YouTube channel, which is amazing. So if you haven't checked that out, make sure you do that. Just look up Adam Taggart or Thoughtful Money on YouTube. Guys, thanks for joining me.
Always a pleasure, Russ.
So tomorrow morning, we're going to have the Future of Money panel. I've had a chance to be on that panel, I think, 3 or 4 years. And thank you, Brien, for letting me do that. It's always been a lot of fun. Last year's was a hoot.
You keep bringing it, so love to have you on it. You do a great
it's going to
job.
be a lot of fun. So Adam is the moderator of that panel, and last year we had some fireworks, didn't we, Adam?
Yeah. I'm sort of the chief attempted lion tamer there. Yeah, got a lot of strong personalities. Who thought that money could be such a contentious topic? But we've had some verbal brawls.
Yeah. Well, I think that brings up the bigger topic, and I know this is really a passion issue for you, Brien. It's the concept of sound money. We live in a financial system where, if you're not familiar, 1971, Richard Nixon took the world off the gold standard, August 15th, 1971, and the world had been on a system where US dollars were equal to gold. They were as good as gold. They were certificates or claims on gold. 1971, that broke, and that really changed the entire world, the entire financial system, the credit markets. If you wonder where inflation came from, that's where it started. And there's a lot of call to deal with the debt, to deal with the deficits, to try to figure out how to tame inflation. And I'm of the belief it cannot be done unless you fix the money. Larry Lepard, who's going to be on the panel with us tomorrow, says, in his book, The Big Print, says, you got to fix the money and you'll fix the world. Brien, this is a core issue for you. Just talk a little bit about what sound money is and why you think it's so important right now.
Well, as you know, Russ, I've been involved in the sound money, the hard money movement for 40 years now, gold, silver, and the like, and great grounding in the economics behind that, learned from some great teachers. But I count you among those teachers because, as you know, when we first started talking about this 10, 12 years ago or something like that, you're such a great educator. You helped reinforce my understanding of gold and how you need to look at gold as not just the ultimate money, because we always toss that out and it's kind of a catchphrase, but a real understanding of what it means of how gold is the center of the financial universe, and all other values revolve around gold. Its value always remains the same. For a number of years, I led off my presentations asking people, what's the value of gold right now? What's the price? And they'll reel off a price, and I'll say, no, the value of 1 ounce of gold is 1 ounce of gold. The dollar, however, is, now it's 1/4,000th of an ounce of gold. So it's understanding that it's a gold-centric world and that everything else revolves around that is key to understanding what's happening today and how gold can protect you. People ask me if gold's too expensive, to buy now. Can they afford to buy gold at these prices? And my point to them is, if you're buying gold for the right reasons, you can't afford not to, because it protects against the depreciation. Every dollar you put into gold now is one that will not be worth 30% less in 3 years or 4 years. So we know that these dollars will depreciate. They'll lose their purchasing power. And owning gold and owning silver right now will protect you from that.
Yeah, I've for years, and I still do to this day, I carry around a package that has 1964 quarter and a 1965 quarter, and I show people, I say, here's a 1964 quarter, here's a 64 quarter, here's the 65 quarter. In 1965, both of these would purchase a gallon of gas. Today, whatever year it is, it doesn't even matter what year it is. Today, only one will. Do you know which one and why? And it's shocking to me how many people do not understand the difference between money and currency. And I think there's some, I could put my conspiracy theory tinfoil hat on, there's some reasons why I think the educational system has kept people really naive about those differences. And they wake up one day and wonder, how is it that a house doesn't change, but it doubles in value for no reason? How do these stocks that don't produce any earnings double in value for no reason? How is it that the cost of food or healthcare or rent double for no reason?
I just interject, double in price, not value necessarily.
Double in price, price measured in US dollars. And it's because the dollar is losing, when you say losing its purchasing power, it takes more dollars to purchase the same thing. And so when you don't have an economic education, you don't understand how policy affects the value or the cost and affects your purchasing power in the credit markets and all the things that we depend on to live and thrive and survive in modern society. Now, Adam, you have an amazing podcast. You really literally interview the A-list, the who's who in the financial community. I don't know that anybody has better relationships. Or you're the Stephen Bartlett. But I'm talking about on the podcasting, right? This guy's going to start a podcast. We're going to help him start a podcast. We're going to put him here on the Main Street Media Network, the official media network of the New Orleans Investment Conference, by the way. So we got that deal done with Brian. But Adam, you get a chance to talk to the absolute smartest people in the world, and you've been doing it a long, long time. When it comes to the issue of sound money or just fixing the financial system, what are these big brains saying?
So, the vast majority of them are obviously concerned about kind of the big picture, what you're raising, Russ, which is, hey, if you own your wealth, if you hold your wealth in fiat currency, which pretty much almost everybody does, mathematically, that's going to be worth less as time progresses, right? And when we made the switch off of the gold standard back in '71, we became a true fiat currency, as are now pretty much every other major currency out there in the world as well. And one important thing to note about fiat currency is it is created through debt. It's a debt-based currency system. And what that means is debt comes along with debt, interest, right? So just mathematically, there need to be more currency units on a going forward basis in a fiat system. So just mathematically, the value of those currency units is going to be less and less as time goes on. So you just have math working against you in that system. Then you bring in, with a fiat currency system, the fact that there's no governor anymore, right? When you are backed by some sort of hard asset, you can't just magically print more money. When you're on a fiat system, you can. So now we have the worst of both worlds, right? We have math working against us, and we have human nature working against us as our policymakers face every challenge with the print button. Oh, okay, we got a problem, let's just print more money, right? And we just went through this with COVID in a way that finally the average person could start to make the connection between central planning policy and
it woke up a lot of people.
It woke up a lot of people. 9% inflation, official 9% inflation, probably much higher than that, actually, finally got people to begin to make the connection in their mind that, oh my gosh, when we actually print more of these dollars, all my costs go up much faster usually than my wages do. So I think most of the experts that I interview are just as concerned about this as you and I. And one who is exceptionally eloquent on this, and I've talked to Brian recently about potentially having her come back here to the New Orleans conference, is Judy Shelton.
Yes.
Yeah. And folks, if you are interested in hearing the most convincing and eloquent rationale for sound money that I've heard in my career, go to my channel, Thoughtful Money. This isn't a shameless plug, it's just where it is. And you will find a 5-minute clip there with Judy Shelton. And I think it's literally the best argument I've ever heard, the most concise argument I've ever heard for sound money. And one of the things she mentions in it is that the Constitution, when it was written, defines what money should be, and it defines it in the same paragraph as how the government is responsible for creating weights and measures and standards, right? So it was always intended to be a fixed quantum, right? That, okay, this is how much a dollar should be. It should be X amount of gold, and that should be invariable going forward, so that people should be able to have trust in the dependability of their money. Not that I don't know what my money is going to be worth tomorrow or the next day or a year from now, right? So, it really was part of the Founding Fathers' vision for this country that it be built atop a sound money system. And of course, we've now deviated from that. I don't want to get too into the weeds on this, but one of the things that Judy has been a proponent of for a good while is, trying to return the U.S. dollar to more of a sound money system. It's a hard sell, trying to get the government to embrace a control that it doesn't want to have. But an idea that she has raised that does seem to actually be getting a fair amount of interest right now is releasing a 50-year U.S. Treasury bond that gives the option to be redeemed in gold. And her idea is to do it this coming year as part of the 250th anniversary of America. And, in her mind, it would sort of be the camel's nose under the tent, that once, the credit investing world has the ability to say, okay, look, I could get paid back in 50 years in these dollars that, if I'm honest with myself, are probably going to depreciate a lot between now and then, or I can get paid back in a fixed amount of gold that we're setting up front in this contract right now. They're all going to choose the latter. And if they do, that starts to really shine a bright light internationally that, there's something wrong with fiat currency.
Well, yes, unless China beats us to it, which is something that I've been following and concerned about for a long, long time. Brian, on this Future of Money panel, we have a new player. Last year it was Danielle sitting in, so it's still going to be me, Peter Schiff, Larry Lepard, and last year it was Daniel DiMartino Booth, who I think is amazing, and Adam is the moderator, which is always amazing. But this year she switched it out. And I've been on panels with the guy that, and we'll name him in just a moment because we're going to be having an interview here with him in just a moment as well, or at least Adam will. And, this idea of a strong dollar versus a weak dollar. And it's in two different universes. I'm the Main Street guy. I'm the Main Street capitalist. I'm always trying to take whatever we're talking about, all this esoteric, macro stuff. What does macro mean to Main Street, right?
Right.
What does that really mean? And when you see your gas prices go up and your egg prices go up and your rent go up and everything's going up and you're like, I don't understand. It's going up faster than my wages, which is a real problem, real wages. And that impacts housing and all this stuff. So, and then you watch the talking heads on TV and they're saying, the dollar's strong. And I've been on panels with Brent, and Brent's like, oh, the dollar's strong. And I'm like, bro, the dollar's not strong. And so there's two different worlds. There's the people who are managing money in Wall Street or for Wall Street or using Wall Street as the vehicle, guys like Brent, and he does a great job at it. And you have to live in the real world. The real world is we have fiat currency, and this is our system. When we talk about sound money, that's like we're hoping someday maybe we can get to that, which is great. But you got to live in the real world, right? And meanwhile, I'm like, well, in the real world, dollar's not strong. It's not strong against gold, not strong against food, not strong against healthcare. Like, it's not really strong. And so, Brian, why did you decide to put Brent Johnson on the panel this year?
Well, Brent, I started getting Brent about, 6, 7 years ago as a regular speaker here because he made an argument that I did not agree with, but he made a very sound argument. He's a good faith actor. It was well-reasoned, and I thought people needed to hear things they may not agree with. And as I talked with Brent about his dollar milkshake theory, which is the fact that there's so many dollars out there, there's so much debt denominated in dollars, that in extremis, the dollar will rise in value because people will bid for those dollars because they have to pay the debt back.
Yeah. I just want to interject real quick for the viewers. So when you talk about strong dollar or weak dollar, what matters is the measuring stick you're using. So Russ, if you're using it versus real things, most people would say, yeah, the dollar is weakening. But the dollar can strengthen versus other currencies. And usually when we hear it in the financial media, they're generally talking about it relative to other currencies. So you can have a strong dollar versus other currency that is actually weakening versus real things in the real world.
Well, I describe it as all the currencies jumping out of the airplane and the US dollar pulls its parachute first. They're all falling, and then everybody looks at the dollar going up. It's not really going up, they're all falling.
Good analogy.
And so,
and there's your example of how you are such a great educator, because it's a great analogy. It really is.
Just trying to get people to understand. So people who are managing money in the markets where they're investing in international markets and stocks and looking at exchange values, they have to be really, really sharp at this. But this concept here of the milkshake theory,
Yeah.
if you look on your currency, if you look on your Federal Reserve note, it says legal tender. When you have a legal tender law, that means that anybody has to accept that currency as payment of debt. The second thing is you have taxes that are denominated in dollars. So you have to, if you earn dollars, you're going to have to pay taxes in dollars, and that creates demand. But the ultimate demand for a currency is debt. And China figured that out, right? China started issuing, making loans all across the world to get people hooked on needing to earn yuan to be able to pay their debt. It's the same technique the United States used to create a lot of demand, but because we've got years and years and years of creating dollar-denominated it's been a long conference, folks, dollar debt all across the world, then people have to either earn or trade for dollars, and that creates demand for dollars, and that is, in a sense, the milkshake theory.
And Adam did a wonderful job of highlighting that that's one of the reasons why Brent gets a lot of flack from, say, gold and silver bugs, because they think he's anti-gold because he's pro-dollar. He is talking about the dollar index, primarily the measurement, the DXY, as it were. The measurement of the dollar against the other major trade currencies. Predominantly, it's the dollar against the euro, and then a bit against the pound, and a bit more, against the yen. That, to me, is irrelevant to so much of the discussions that we have. The dollar index is relevant to traders. It's relevant to business people who have cross-currency transactions. But what we're talking about is entirely divorced from that. And Brent actually is a gold bull. He thinks gold will win out in the end, and associated with the dollar being a safe haven or a necessary currency to settle this debt, dissolve this debt. At the same time, he thinks gold will be rising, and he is a gold bull.
He actually doesn't love the dollar. While he finds himself in the position of defending the dollar's position in the world, he actually isn't like a dollar lover. He has the same concerns we all have about its long-term purchasing power and all that stuff. But he is trying to say, folks, I'm trying to explain the world as it is, not as the world as I wish it to be.
And that's so important. I think one of the great lessons that any investor or business person can have is you're going to have to talk about policy when it comes to managing money. You're going to have to, because policy matters. Policy affects whether it's fiscal policy, what the Federal Reserve is doing in terms of interest rates and reserve requirements, and whether they're pumping up the market or not in terms of, or that's monetary policy, I'm sorry, and then fiscal policy, what the government is doing in terms of spending or not spending, and now trade policy, whether there's tariffs, and that brings in a whole different channel. But at the end of the day, we live in this real world. And there's pragmatism. I think Donald Trump takes some criticisms too, because he's not an ideologue, he's a pragmatist. I think Brent is a pragmatist. He's like, oh, look, I got to manage money in the real world. And so in Main Street, we have to manage money in the real world. But to do that, you have to set your policy proclivities aside. You have to stop thinking, this is how I want it to be, this is how I wish it was, this isn't right, this isn't fair, I refuse to play. You got to, it's like saying, well, I don't want to use debt. Well, the whole aquarium is debt, right? If you're going to be a fish in this pond, you're going to have to use debt. Well, we're advocating, how can we get out of a system that requires an ever perpetual amount of debt? So last year you announced a kind of a pet cause of yours. You're talking about starting a foundation to promote this. I totally want to help you with this, because I believe, as you do, that the real secret to stabilizing the economy, not just in the United States, but globally, is to get back to sound money. We better do it before somebody else does it for us.
Yeah, and I am a bit of a pragmatist as well. I think we need to do it individually, and I don't hold out much hope that the powers that be will ever allow it to happen. I think it's important to note that what we're seeing today is nothing new. It is human nature, as has been played out throughout human history. Every civilization in human history, every organized group of humans where there is any sort of rule or central authority, where there has been money, where there has been currency, that currency has eventually been debased because of various reasons, just the same every time: overspending, military adventures, bread and circuses, just entitlements. One of the things that sunk the Roman Empire was entitlements. And in that civilization, the people that were collecting the entitlements and the retirement benefits were the soldiers. So you really had to keep them happy. But it's all played out throughout human history. It's the same story, the same recipe. When debts get too large, the currency gets debased. I don't think, despite Judy's efforts, and I have more respect than most people for Judy, as much as anyone for Judy. She's a wonderful person and a valiant warrior for an advocate for sound money. But I just don't have a whole lot of hope that will ever convince the government to give up their power to allow a gold-backed or a gold-backed currency or a sound money, because it takes that power away from them. What I want to do is take away the friction from owning gold, take away the taxation, have it recognized as it was in the Constitution as actual money. That's not saying you have to take away legal tender status from the dollar or paper currency. Let the Fed and the Treasury pull the levers in with that, because if gold and or silver, well, gold and silver, are allowed to status as legal tender and you cannot tax it, then we can protect ourselves from the ravages of the dollar and that currency. And as you know, the Gresham's law means that if there is good money and bad money, the bad money is going to be spent. People are going to want to put that out into commerce and get rid of it, and they're going to hoard the good money. So in that kind of a situation, the sound money will just be hoarded. Mm-hmm. It won't actually circulate, but will be protected from what the government does. And that's the key thing, because inflation is, it just ravages an economy, it ravages people. The wealthy can protect themselves, but the vast majority of people cannot be protected from it.
Yeah, Keynes, the author of the concept of governments being able to print money, and he warned everybody. He goes, look, inflation is this thing that not one man in a million can understand, but it gives a vehicle for government surreptitiously to steal
exactly.
from their citizens. And but it does it in a way that a few will actually become quite wealthy. And obviously anybody who understands how to use debt for productive means, buying assets that appreciate because of inflation, like real estate, and then come with the payments, actually make the debt. That's why I've always believed that debt and real estate and gold, three things, if you put them together in a portfolio,
powerful.
You get to double short the dollar, insulate yourself, and own something that's tangible, that's real, that largely is outside of the manipulations in the market. It's very hard to manipulate the real estate market. It's very hard to manipulate the gold market. I know it happens, but it's not the same as what happens with stocks. Now,
but the currency manipulation, you actually turn it into a benefit for you because it's diminishing the pain of repaying your debt.
Exactly.
Yeah.
So traders, like, they follow technical trends and they try to buy low, sell high, and they watch a charge, green light, red light, and it's not my game. But I think if you catch the mega trend that's underneath, the old adage, the trend is your friend.
Right.
And if you look at a chart of the U.S. dollar from 1913, when we got the Federal Reserve, till now, for the most part, it's like straight down.
Yeah.
It's a ski slope. And if you understand that the thing that's causing that isn't changing, and in fact, in some ways, if you kind of bring the chart down, you can see it's accelerating. And the way you see it, the barometer is gold, right? We've seen what's happened with gold. Gold is the barometer. Gold's price spike is the inverse of the dollar's decline in real terms. But you work with investment advisors, and these guys specialize for the people who want the hands-off experience. They're not going to go buy real estate. They're not going to go buy apartments. They maybe aren't in a social network where they can get into private placements. You're going to just turn your money over to a professional advisor. What kind of strategies are they using in this type of an environment? How are they dealing with preparing people to be resilient?
It's not dissimilar to sort of what you just described. So first off, in my world, I had to go out and find financial advisors that actually were aware of all these trends that we're talking about, and then willing to actually engage with their clients around it, right? Most advisors out there are just, the trend is your friend, stock market goes up, buy the dip, don't worry about this other stuff, gold is for tinfoil hat, crazies, right? And so it really is building a diversified portfolio, because we may have a sense of what the trend is going to be over the next 10, 20, 30 years, we don't necessarily know what it's going to be like next year, right? Or 6 months from now. There's going to be a lot of ups and downs along the way. So diversification is really key, but having a healthy exposure to a diversified portfolio of hard assets. One, just for the insurance that Brien is talking about, right? I mean, there's a very simple approach you can take and just say, hey, look, I'm going to be in hard assets that I think will roughly preserve their purchasing power going forward here, right? And so any appreciation to you is almost immaterial, right? You're just trying not to lose purchasing power. But there are a bunch of hard assets out there that for commercial reasons or just underinvestment in our pursuing them in the Earth's crust, or just increased scarcity now for some of these things, that could go through some pretty dramatic price appreciation just because supply is shrinking while demand is increasing, right? So there's actually some good ways to really potentially prosper from some of these big trends that are going on, in addition to just the currency debasement that we're talking about. And then, kind of back to the Brent part, it's being a realist as well, which is really one of the best ways to beat inflation over the past 20 plus years, has been owning stocks, right?
Yeah.
So it's not that stocks don't play a role. You want to kind of play the game while it's still working in your favor. I mean, I know a lot of people who sold everything and moved to gold and silver, 15 years ago, and until a year and a half ago, had watched the stock market leave them in the dust, right? So it's not an anti-stock necessarily message, but it's it plays a role in the portfolio, and there are times where it makes sense not to be there. So what are the indicators I look at to make sure that if things are getting dicey in the markets, I'm less exposed to them?
Yeah, well, I mean, there's a bazillion stocks out there, and I think the thing that I really appreciate about the New Orleans Investment Conference is there are stocks that everybody's in, and you got to argue they're like ridiculously overvalued.
Easy argument to make.
Right, it's pretty easy to argue that. But then there are sectors where the stocks are actually companies that are developing real assets, commodities, and this is the space you've been playing in for a long, long time. You have the Gold newsletter, you do a lot of analysis and recommendations, and so we're going to bring this thing home, and I want to just close out with you, Brien, talking about your Gold newsletter and that service, and also the New Orleans Investment Conference, and what really happens here for people who attend, specific to trying to figure out, do I want to just go buy stocks that are the hot stocks, the Mag 7, and hope that they just continue to use the plunge protection team or whatever you call it to pump that thing up to give everybody faux balance sheet wealth so they feel, or do I want to go buy real companies that are producing real products and generating real profits by producing real things that the world needs, like commodities and energy? So this is the world of the New Orleans Investment Conference. Talk a little bit about that.
Yeah, we focus on bringing value and ideas to the attendees, and frankly, more value and I think better ideas than any other event out there. It's really our mantra, our business model. Content is king. We don't try to have a cohesive theme or everyone thinking alike. As evidence, Brent Johnson, a good faith actor who presents a good, well-reasoned argument that I didn't agree with at the time. And over time, I've come to really appreciate it and agree with really now the majority of Brent's points.
I think it's one of the most useful frameworks I've heard of in the past 5 years.
Yeah, and so we present people that you may see in social media, you may follow them. Every year, people come up to me and say, well, how did you find this guy or this woman? How did you find this speaker? And they're fantastic and everything. That all year long, we scour the internet, we scour YouTube, we scour social media, we read everything. The we is kind of a royal we because it's me out there doing it, but we try to find the top thinkers out there who are presenting good cases for what's going on. It just so happens that the times we are in are so extraordinary that we're seeing a lot of extraordinary people rise to the fore to explain them to people. And they're out there, and this is your opportunity to hear, not just hear their latest views, but you get to meet them and mingle with them, ask them your questions, get that give and take for your individual situation. So that's kind of our niche, and it works. If you see the crowds here, that they're coming in, we have really big crowds here because a lot of the things that we were talking about for years, I mean, over the last 10 years easily, probably much longer, we've been talking about the inevitable depreciation of the dollar and other currencies because of those trends with debt and the reliance of markets on central bank liquidity and the like. Well, now Wall Street has slapped a label on it, the debasement trade. So now we have marketing, on our side.
I guess we answered the question, which is when are they going to care? I guess it's $4,000 gold. I guess that's what it takes to wake up the Main Street.
There's a battle
media.
going on. I mean, as we're recording right now, it creeps above, they knock it down. Creeps above, knock it down.
But that's the point too. That now you see Wall Street. You look on the mainstream media. They talk about the debasement trade and how to play it. We've been doing this for years and
Since
years.
$400 gold or less.
Yeah. So. What's the next thing? Well, I think this is the big thing right now, and I think it's going to continue. But the next crisis, the next opportunity, I look back over the 50 years of this conference, and there has not been one significant seminal event in the financial markets and the economy that has not been predicted on that stage. So not everything is correct, but it gets you thinking and gets you looking forward and preparing to protect yourself and to profit from the trends that are just developing.
Yeah.
Sorry, but just to give props to Brian here. First, there's a difference between information intake and then processing. And what's so great about your event, Brian, is it's really great for both, right? You got lots of great experts up there on stage. It's a fire hose of information. You can learn a lot by listening to these greats. But it's really the processing magic that happens outside, off of the stage while people get to talk to other like-minded investors.
Yeah.
Hey, did you understand that? Here's what I think about that. What do you think, right? And then they get the chance in the hallways to grab some of these guys when they come off the stage, and they get to talk to them for 10, 15, 20 minutes. So it's really useful in getting exposed to a lot of great information, but then actually trying to figure out exactly how to make that actionable in your life. I also want to give you kudos because I agree. I mean, I've been coming here for, the better part of a decade, and I can think of a number of examples. Right now I'm thinking of Rick Rule up there several years ago talking about uranium, and it was a dead market, but he said, folks, trust me, this is going to come alive at some point. Couldn't exactly say when it was going to, but we look back now. I mean, if you bought in when Rick told you to buy in and you held, you've had a phenomenal return.
Yeah, and we don't pretend that everyone is right, but we do try to recognize the big trends, the trends that you need to play, and the timing's always the tough part. But there are a lot of very important things that are now coming to fruition now that we've been talking about for a long time. That's why these halls are swelling with investors that have benefited from that advice and are finding other ways. Our exhibit hall gives you practical ways to take advantage of these trends, from either protecting yourself with physical metals or finding these exploration stocks or development stocks that are finding minerals and metals in the ground. The camaraderie with the fellow attendees is I think, unique. It's special. You get to share ideas, and it's a force multiplier because everyone's seeing different things and sharing what they're seeing and the opportunities that they're seeing.
Yeah, I mean, obviously a huge fan, been coming here probably longer than you, not longer than you.
No.
But I'm a big fan of live events because you get a chance to really be focused. You hear a lot of ideas all at one time. You're swimming in a pool of good ideas. And you talked about not every day is right, idea is right, but if you're not in the pool, you have no ideas.
Right.
You've got to be in a pool of great ideas, and then you can vet those ideas in conversations. And one of the best things about coming to a conference, and one of the things that I love about what you do, is in today's age of media, here you are, you can listen to a lot of people and hear what they have to say, but to be able to hear a group of smart people like this Future Money panel we're going to be on, where we all get to talk to each other, where we have a great moderator pulling us out. Those are conversations you don't find on social media, maybe after the fact because they're available through the New Orleans Investment Conference, probably on the website, but I don't know.
Yes.
But anyway, so we're going to bring this thing home because Brian is a busy man. He's running a very big conference here, and he's gracious enough to give his time. But if you're interested in coming to next year's New Orleans Investment Conference, please come join me. We're going to have a ton of fun. Just send an email to neworleans@mainstreetcapitalist.com and get you all the information you need. We'll have an event for our listeners. You can come out and check it out. Adam, any closing thoughts? You'll be here next year.
I'll be here next year. Really looking forward to this year's Future of Money panel.
Yeah.
Just a little teaser for folks. I think there's a topic that's going to be brand new this year that could really be a game changer. It's certainly just a brain buster in terms of wrapping your brain around it. So hopefully that's incentive for folks to buy the replay of this year's and then come next year.
Yeah, well, I'm looking forward to it now. I didn't know you had a
I'll
surprise
tell you when we turn
for
off the
us.
mics.
Yeah.
What's the date?
End of October, last week of October.
28th through 31.
Yes, thank you,
28th through
sir.
31. 28th through 31. If you've never been in New Orleans for Halloween, check it out. You're going to like it. Hey, and Adam Taggart has got a show on the Main Street Media Network, so you're going to want to check that out. And I'm hopefully to recruit this guy here to start his show and put it on the network too. So we'll see you next time. Thanks for listening.